So in the wake of that Bank of Japan policy move, the yen is falling against all major currencies. But Sara Eisen over here at the markets desk is hearing that this just isn't going to be enough to put the brakes on the yen's rise. Sarah, what's going on?
Well, the market's certainly reacting that way. You can see now that the yen slide is running out of steam here. It really sharply slid when the Bank of Japan called the emergency meeting on speculation that they might intervene, that they might lower the interest rate, that they could do more of aggressive quantitative easing. But then it has not been able to hold on to those losses as the Bank of Japan might have liked. And that's why Bank of Tokyo, Mitsubishi, BNP Paribas strategists say that this will not alter the yen's uptrend. It is just not aggressive enough. Market was hoping for something a little more in the way of a policy shift here. So if you want to still take the bet on the yen, I did dig up an ETF. It's a ticker FXY. Could be a risky bet here because you might have to fight the Bank of Japan. But still, the call on the street is that the yen will continue on its uptrend.
Okay, well, speaking of central bank moves, obviously the Reserve Bank of Australia also moving overnight to raise interest rates. But what's the future for the Australian dollar, given that we just heard the Australians aren't likely to hike again until at least February, perhaps later?
Exactly. There was an element of disappointment in this decision as well, and there was no strong signal to continue to lift interest rates in the future by the RBA saying that inflation may moderate there, and that's a signal that many more interest rate hikes may not come. Now, some context here. Australia's dollar has been the hottest currency, second hottest currency in the world so far this year on a very strong run. Investors rushing to buy Aussie dollars as its central bank was the first major central bank to lift interest rates after the crisis.
And then a month after that, and then a month after that.
A string of interest rate hikes. Here's why it may not be such a bullish bet anymore, say strategists, and that is it's looking very expensive. A lot of these interest rate hikes have been baked in the cake. It is getting very expensive. Also, you have to keep a close eye on China when you're talking about Australia's dollar. The two are very tightly linked here, and any sign of a slowdown from China, whether it's an inventory buildup or anything like that, says Jeffrey Yu of UBS, could be a bearish signal there on Aussie. So tread cautiously if you're thinking of buying the Aussie.
Wise advice. Sara Eisen right here on the Markets Desk.